Good morning, everyone. This is Daily Trade Analysis with a market update. Yesterday, we got a lot of data that we are going to review and answer those questions that you may have about why the Nasdaq is having that weakness despite the fact that ES is creeping higher. Well, it's all about expectations and it's all about the economy. First, we are going to say that Chair Powell's speech in Madrid with the ECB the cause was nothing new, so we are focusing on the remarks that he said yesterday, not yesterday, on Wednesday, on the panel with the rest of the governors of central banks. And we are going to have those statements in mind in order to analyze why we are seeing this weakness. And the first thing we are going to see is that GDP growth rate quarter over quarter, this is for Q1, as you can see, this came 2%. And we were expecting 1.4. And if we see the evolution from that quarter over quarter, in the second estimate that we got 1.3%. And we were expecting 1.4%. But it came 2%. So basically 0.7% higher. And that means that the growth rate is higher than expected, well above the 1.3% in the second estimate and the forecast of 1%. So that's a good piece of news. Price index remain there and growth rate is actually going higher. So the fears of recession basically go away. We are positive, we are optimistic about the growth of the economy and the health of the economy outlook. But the things turn down when we analyze jobless claims and PCE prices. Let's first start with initial jobless claims for June. 239,000 instead of the flat number 265. If we see the evolution, we got really nice numbers on June, but we are now ending the month with a huge decrease. Look at these three readings, 262, 264, and 265. That was a nice move higher from May, but we are now turning lower. So less people claiming jobless is basically showing again the strength of the labor market. Continuing jobless claims, 1,742,000, a little bit lower than the forecasted. And again, look at this trend. Since April, the continuing jobless claims, the people that is continuing claiming that is jobless long term, it's going lower and lower and lower. So these two readings are showing you that labor market is really strong. And let me just bring up to the table again what Powell said yesterday. So basically, you can see here, we believe that there will be more restrictions coming. These are the 1 or 2 rate hikes that Fed, Powell, and the FOMC board is thinking about, all driven by the labor market. So it's all about the labor market. Basically, with the readings that we got, we are confirming and we are increasing the fears. Market is saying maybe 1 rate hike will not be enough. Maybe we need 2. For July, the expectations on the FedWatch tool is 87% for the 25 basis points. It's going higher and higher and higher. But it's not only about this read, the next meeting. It's all about the terminal rate and the probabilities that may go higher in other meetings. And I was saying yesterday in Wednesday's video that look at this November reading. It's 52. Now for the 550, for another 25 basis points from the 525 that we are already expecting in July, this was 24, 25. It's creeping higher. From last week, 10-15%, now we are doubled, 34%. So more and more analysts are pushing towards terminal rate that is 2 rate hikes of 25 basis points ahead of the current rate. And that would be a disaster for the market because the market is going all in on the expectations that it's only going to be 1 rate hike. market is going against the Fed. Regarding cuts, we are all expecting Fed, I don't think is going to start on January, but that's my opinion. But analysts are saying that in March, they are going to start cutting rates with 35 probabilities for 25 basis point interest rate cut. That will be the first cut in almost 2 years. So this is the current situation. So let's go to the charts and let's see what happens. On the daily chart on the Nasdaq, as you can see, we are now pulling that the awaited higher low that we were expecting. I was watching this, so we can now remove the fib retracement. It did a nice job. And basically we have this range in which we broke out until 15,500 more or less. It was 475. And we are establishing the higher low. We are trying to push higher, but Nasdaq is having difficulties up here. If we check the ES is basically pushing with more strength higher, but it's in the same kind of pattern. That will be a stair-stepping up ABCD resolution that, that I am basically watching here with these two trend lines, the lower trend line and the upper trend line. And I'm watching this 15,200, 250 to really break these weeks on the daily that may bring us a little bit of move towards this level 15,322 that is last week high. So this candle is establishing last week high, and we may see this kind of move. But remember what I said regarding economic data and the outlook. And everything can happen because today is the last day of the week, the last day of the month, and the last day of the quarter. So be really careful, because regarding monthly, let's check. This is the, let's go to the NQ. This is the monthly chart. Look at these months. Nasdaq is basically going parabolic from the bottom month after month, squeezing higher, and we found this level at 15,260 something, 50 something, in which we basically rejected. It would be a good time for the monthly to really pull back a little bit. And for the quarter, look at this strength. We are almost there also. So all these, this is the 3-month chart. This is quite strong. So the pullback and the reversal is there. The pattern, the setup it's appearing quite nicely, but I don't think we have strong fundamental and strong data to really justify a move higher, unless it's just continue higher based on options. But last day of the week, last day of the month, last day of the quarter, everything can happen. Then for next month, for next quarter, starting next week, I think fundamentals will have more weight on the price action, and we might see some move down. But let's see what happens today. Let's go to the lower time frames, because I have very critical details that you might found. So this is Wednesday low. Look at this. Yesterday we tapped basically at 15,030 support on the Nasdaq. On the higher end, we from pre-market, when the news dropped, the economic data dropped at 8:30, we basically dropped and we couldn't go higher. So I established also this pivot at open and this pivot at pre-market. And these are my two levels ahead of resistance. Basically, that's 15,140 that we are now trying to establish support in pre-market, and then we have the overhead resistance at 15,192 and the 200. That's that week, and the support from Wednesday. So that's the range, and as you can see, we are trying to establish some kind of support, the consolidation here, but these are two levels that, if broken, can provide some momentum to that price action. So regarding the open interest, the Nasdaq is not showing new open interest, so new money I think is not coming in Nasdaq. But the S&P is, look at this, is quite different. It's showing more strength to the upside, and it's showing also 20,000 of open interest on Wednesday and 15,000 open interest in yesterday's action in regular time. So quite a lot of people is interested, and if price action is going higher with open interest going higher, that supports the idea of the S&Ps trying to squeeze a little bit more. And if this setup is this week at the high is 4438 and we are now approaching 4440, I think we might have some kind of momentum to do this on the technical side. But again, you have to think about the fundamentals and the outlook, and we might need a little bit more patience and time to really see what is happening on the Nasdaq. Again, the pre-market action is bullish. The overnight inventory is just going higher, is supporting settlement, even the lows of pre-market low going higher, breaking prior close and establishing new highs in pre-market. And we are, as I was saying on the 30-minute chart, I'm targeting this as support 50,140, and for right now we are hovering there. So let's see what happens in the overnight. But dollar it's quite moving higher. So if dollar goes up, stocks usually suffer a little bit, found a little bit of weakness. So watch the dollar and watch gold. Let's first start with the dollar, because dollar is just bouncing off the level that I was mentioning this week. And on the 30-minute chart is trying to creep higher, trying to support this green area and trying to build higher highs, higher lows, and starting this trend. That is causing gold contract on futures to really continue lower. So this is a confluence that markets are establishing, dollar strength and metals, including gold, also weakness. So I'm expecting stock market to really find also weakness if dollar continues higher. So watch the dollar for today's price action, because it's going to be quite critical. Regarding the Russell, 1.15 yesterday, establishing this higher low, and on the trend, this is quite nice. So let's take that note of this higher low that is also established. And quite interesting to see this 189, 190 break. Again, Russell 2000 means risk on and broadening the market on the rest of the stocks, and watching also RSP, the equal weighted ETF, that is also pushing higher, 1%, and the amount of stocks that are above the 200. It brings up the idea that the rest of the market is also strengthening, but the ones suffering is inside the Nasdaq, the big tech stock that is right now pulling back. And with higher interest rates, it's quite, I understand, it's quite obvious that the tech is going to suffer more than the rest of the market. But anything can happen, because the rest of the market now can be able to really support the Nasdaq in a move higher. Certainly the S&P is showing that with more strength than the Nasdaq, and the Russell is also looking quite good for a move higher. So let's see what happens today. Remember, last day of the week, last day of the month, last day of the market of the quarter. So banks they passed the stress test yesterday, and Jerome Powell said that they are quite strong and resilient with a lot of capital in reserves. So quite green. Look at these numbers: 350 for JPM, Bank of America 2%, Wells Fargo 4.50%, Goldman Sachs 3%. Everything was squeezing, not only the big banks, but also the regionals. So XLF got a little bit of relief with 1.74% in the green, and energy is also creeping higher. So let's take a look to the crude oil, because it's not crude oil, but let me show you where it is. Here it is. It's also natural gas that is trying to go higher. Look at this structure, this consolidation of months and months since February. So at some point, natural gas can provide some opportunity, but remember that it's called the widowmaker for a reason, and the contract on futures is quite dangerous. It has a lot of potential down here for a move higher, at least towards this 5 level that we can retrace from this first pivot, first stop 3.6, and then for long term 5 would be quite reasonable to reach again this support that might be resistance in the future. So energy overall XLE is 1.15, still super low, trending lower with a huge descending triangle. So let's recap. XLF bringing some strength, XLY continuing higher, with Tesla bouncing, with Amazon trying to push even higher to catch this gap since September last year. So this gap is gap entry 132, gap fill 134. So we have some interesting setup in Amazon. Microsoft rejected the all-time high, is now trying to consolidate lower, so no edge in the middle of nowhere. Apple continues squeezing and grinding higher on the daily. All-time highs after all-time highs. So yesterday we checked the price action, choppy. On Wednesday, push higher and choppy. So looks like a lot of these tech stocks are really thinking about we may go higher, but there's a lot of shorting based on fundamentals, and that's causing a lot of choppiness in the price action in the individual stocks and also in the Nasdaq index. So the S&P has quite a better price action, honestly. Not on Wednesday, on Thursday, but overall the trend, despite being choppy, it's quite better than the Nasdaq. The Nasdaq 15-minute is also showing a huge range on the 30-minute, as I showed previously. But let's see what happens. Yields. Well, yields with this outlook, look at this push. We reach 4.9 on the 2-year, and this is quite bad because yields still going higher. Treasuries are not being able to push higher because the outlook of higher interest rates. Look at this gap down on the treasuries, on the TLT, quite aggressive. And the high yield corporate bonds that usually are convergence confluent with the market going up, it's in the middle of nowhere. So there's no clear understanding, no clear sign of risk on based on yield, treasuries, and corporate bonds. The 2-year yield is spiking, the 10-year yield, look at this spike. This is quite huge, 3.85. I mean, the yields are spiking higher. And what is the outlook for December? Well, we pushed higher yesterday, 1.41 on the December outlook, 5.4. Look at this. Bonds market are already pricing in not one interest rate hike, but two. So be really careful with the Fed Watch tool, with bonds market, with the Fed, and with the stock market, because they are not agreeing with themselves. Fed is pushing for high interest rates based on fundamental, and remember that Fed is right now is super data driven. So initial jobless claims, GDP growth, and the PCE from yesterday. Let's review that because I think I missed that. Yeah, I missed that. Let's talk about the PCE prices for quarter over quarter for Q1. PCE prices came higher, 4.1, the previous one 3.7 for the last quarter of 2022, and we increased from 3.7 to 4.2. That is really bad on the PCE. PCE is the most watched indicator for inflation from the Fed. And the core PCE, the previous was 4.4%, and we got 4.9%. So look at these numbers. This is not looking good for the outlook of the inflation. The outlook of the labor market remains quite tight, quite strong. So that's why we are seeing this weakness on the Nasdaq, on the stocks, and all this bullishness on the yields, on the outlook, and on the dollar. So watch these markets because they are going to be quite important to really understand what market is expecting in one side, and on the other side, what the Fed is trying to do, and what Nasdaq is just ignoring perhaps, because I think a lot of the price action in the Nasdaq is basically ignoring the fundamentals, ignoring the Fed, and ignoring the situation on the overall economy regarding inflation. So be really careful, don't get trapped. Today is Friday. We have been chopping around this week, and with fundamentals from yesterday, in my opinion, it doesn't make sense to continue higher. We have the setup, we have the ranges, we have this kind of levels ahead of resistance. We have this clear support down here. So watch these extremes to really see if the market wants to break those. If we want to break higher, let's see what happens. Let's see 15,200. If you want to break this range to the downside based on fundamental analysis, watch this support from Wednesday, 15,029, and more than that, the psychological support of 15,000 down here. So it's going to be an interesting day, but also a risky day. Don't ruin your week, don't ruin your month, and be really patient. Discipline and risk management are really key for your success. So thank you for your time. If you found this video useful, please give it a like, subscribe to the channel, and let's continue trading as we are doing with understanding other markets, understanding the data, understanding the context and the situation, and trying to manage our best the risk that we have in these markets that right now is quite choppy. So stay safe, everyone, and let's see what we got today. Last day of the week, last day of the month, and last day of the quarter. See you later.